Hey there, welcome to the team. I am absolutely thrilled you're here for your first week. Seriously, pull up a chair, consider me your senior colleague, here to show you the ropes. Today, we're going through your Cash and Treasury Management course orientation. Now, this explainer is built specifically for you, our newer accounting staff. Whether you're jumping into bookkeeping, AP, AR, or maybe gearing up for your very first month-end close, well, you're in exactly the right place. We're going to set you up for absolute success and build a rock-solid foundation before you even think about logging into our live systems. So, let's get into it.
Okay, here's our agenda for today. We've got 1. Why cash matters most. 2. Your course roadmap. 3. The 5-step cash cycle. 4. Why controls are critical. And 5. Next step, cash basics.
All right, section 1, why cash matters most. So, cash is literally the single most important asset in any business. I mean, it's the lifeblood of everything we do, right? It pays our hardworking employees, it pays our vendors, we can keep the lights on, and it repays our lenders. But because it's so incredibly valuable and totally liquid, it's also the ultimate target for fraud. And honestly, that threat comes from everywhere, from outside bad actors trying to phish us, to internal errors, or sadly, misappropriation. As a junior accountant, you are going to touch cash every single day. You'll be posting receipts, cutting checks, reconciling accounts. Understanding exactly how this cash moves, and more importantly, what can go wrong is absolutely crucial for your career.
Now, if you're feeling a little overwhelmed, take a breath. Here's the good news. We are completely skipping the intimidating advanced treasury stuff. You're not going to find any crazy complex derivatives, hedging strategies, or SEC reporting in this course. That's for way down the line. Instead, we're focusing on the practical, daily tasks to help you avoid mistakes. Think posting receipts, processing vendor payments, the real day-to-day stuff. We want to equip you with exactly what you need to do your job flawlessly right out of the gate.
Moving right along to section 2, your course roadmap.
Okay, so this course is broken down into totally manageable, bite-sized pieces. We start with cash basics, just a quick 4-minute read. From there, we literally follow the money. We go through the cash receipt cycle, which is money coming in, then the cash disbursement cycle, money going out. Then we check our work with bank reconciliation. After that, we hit forecasting, the month-end cash close, and common fraud and control risks. You're looking at about 5 or 6 minutes per module. Oh, and at the end, Module 8 is a quick reference guide. Super fast, no unnecessary fluff. To get the most out of this, here's my advice. First, read each module in order. They build on each other. Second, you'll see knowledge checks at the end of each module. Really try to answer those before peeking at the answers, okay? Active recall is a game changer. Third, and I can't stress this enough, use that quick reference guide in Module 08 early on. Seriously, save it right to your desktop. And lastly, when you're doing these actual tasks next week, come right back here and revisit the specific modules.
All right, section 3, the 5-step cash cycle.
Let's break down how cash actually flows in plain English. Think of a typical day. Step 1, you've got your morning coffee, you log in, and you see a customer paid us. Boom, cash comes in. Step 2, you apply that payment to their specific invoice so their account is current. Step 3, later in the week, you're paying our vendors, cash goes out. Step 4, at month end, you play detective. You reconcile what the bank portal says against our internal books. And finally, step 5, you close the books and confirm the balance is absolutely accurate. Everything we do ties back to one of these 5 steps. Next up, section 4, why controls are critical. Now listen up, because you are going to hear the word controls a lot around here. Let's define it. Controls are the rules, steps, and checks that prevent mistakes and fraud. And I really want you to reframe how you think about this. Controls are not just annoying corporate red tape. Actually, scratch that. They're not red tape at all. They're your armor. They protect the company from huge financial losses, sure, but they also protect you personally if something goes sideways. They're what guarantees our financial statements are 100% accurate. This is why we take it so seriously. Skipping a step, even just once, opens us up to massive risk. Look, I get it. It's 4:30 on a busy Friday, you just want to go home, and you might be tempted to bypass a secondary approval because, hey, you know the vendor, right? No way. Don't do it. The most expensive, catastrophic fraud losses happen because someone assumed a routine step was unnecessary just that one time. Bad actors literally bank on that exact kind of complacency. Which brings us to our golden rule. If a control exists, follow it, even when it feels like extra work. Let me say that again. If a control exists, follow it. It is absolutely non-negotiable from day one. If the process says get a second signature, you get the second signature every single time.
Finally, Section 5. Next step, cash basics.
So we've covered a lot, and the only question left is, are you ready? Are you ready to master the foundational definitions you need before touching anything else? You know why cash is king, you got your roadmap, you know the 5-step cycle, and you know our golden rule about controls. Your next step is to dive right into Module 1, Cash Basics. But as you click over, ask yourself this. When you're in the middle of your very first stressful month-end close, will your foundation be strong enough to do it right? Go ahead, start that first module, and let's make sure that answer is a resounding yes. Catch you on the other side.